Vacant office space in San Francisco. You could see it accelerating on the right-hand side there. This is all putting pressure on the commercial mortgage-backed securities in commercial real estate in general. Quick note for my friends in the UK, they are discussing what's going on right now, and as a result of this, you're going to see higher taxes. They're coming. You're also going to see more debt. The deficits will get worse, of course, in every manner, not just in the UK, but everywhere else. The furlough scheme is to be extended, and workers will get up to 80% of their wages paid for the hours that they don't work during the new lockdowns. So what I wanted to note here was that this is great and all. The 80% of wages, though, what if people are paycheck to paycheck? What if they're at or just below the poverty line? I'm not saying that it's not enough or they need to give more or whatever, but I'm just saying these are the critical aspects that we need to be paying attention to so that we can understand what's happening to the individual. Maybe that might not be us, but certainly these are our neighbors, these are people around us, and unfortunately, they will be hit hard by what's happening today. This was sent to me by a subscriber. In the third quarter of 2020, the overall GB vacancy rate increased to 13.2%. Now that is quite high, especially comparing from the second quarter, 12.4%, but this was huge. This was the 9th consecutive quarter of increasing vacancy rates from the second quarter of 2018. 9 consecutive quarters. That tells you that there is clearly a trend, and it was going on long before 2020. We have seen a record increase in the number of shuttered shops. Shopping centers fared the worst among the retailer sites due to the higher proportion of fashion outlets where consumer demand has been hit the hardest. The UK is dealing with the same situation as the US, as Canada, as Australia, and others. I've got some information related to real estate. I wanted to talk about it. This is actually an article from last week, I believe, but it contains some information that I did not get to, and I wanted to highlight it here. Toronto, the biggest bubble on earth right now in real estate for many different reasons when you look at it, but they had some information right here that I wanted to share. In downtown Toronto, home of the second largest financial center in North America behind New York, apartments are piling up. Rents have plunged. They are down 14.5% right here in the third quarter compared with the same period last year. Properties are also sitting on the market longer, 26 days in August compared with 14 a year earlier. That's interesting, but you look, as they mentioned right here, there has been this huge surge in the prices of homes. By contrast, prices for detached homes in Toronto as a whole are up 13% on the year. The overall housing system seems to be divided into the country's national housing agency. This person right here from there is basically saying this is where risks start to appear. When you have a crack, it can absolutely destroy the foundation. It works the same way in a household that it does, of course, in the financial system itself. There are more details here. It describes a lot of different cities, but I like to highlight Toronto whenever I can, simply because it is an exaggerated bubble beyond anything we have ever seen. Manhattan apartments are the cheapest they have been since 2013. Listings have tripled from a year ago, where the median rent has tumbled 11%. Even bigger declines for studios. Take a look at this. You could see what had been happening over that period 2018 into 2020. It was rising slowly but surely, and then everything came tumbling down. This is a Wall Street Journal article that is quite in depth, actually. I would love to just break it down in one video. I knew that if I didn't mention it here, then I might not ever cover it. I just wanted to really touch on a couple points quickly. Fallout from missed rent payments is threatening a swath of the US population as expiration of eviction bans draws near. I've talked about this before. There is so much that is riding on everything to be fixed and going back to normal very soon, but we know that isn't the case, and so that puts pressure on the individuals, on the landlords, on the lenders, and so on. A large number of renters have been unable to pay some or even all of their rent since March. Many businesses remain closed or only partially open, pushing renters into unemployment and draining their savings. What happens when these moratoriums are lifted? Are they actually going to continue this beyond into next year? We'll see what happens. But essentially, this could be very painful for a lot of people. And we look at the impact on the actual economy, as they mentioned right in this paragraph here. It is significant. We know that, and something that we should be paying attention to. This article here is talking about San Francisco. The restaurant industry projects half the eateries in a city consumed with innovative dining may not survive 2020. Some already have closed. There will be no more Eggs Benedict, for example, served with a view at Lewis's restaurant, which had a prime perch on a cliff overlooking the Pacific Ocean since 1937. So many companies are being completely destroyed right now, and they've been in business doing well for decades and decades. They talk about vacancy rates here. Office vacancy rate has tripled compared with December to 14.1%, the highest since 2011. They discuss some other factors in here, just looking at the rental rates dropping 20% to 2,800. Again, 2,800, high number, but compared to where it was. And of course, people are buying into certain homes, then they try and rent them out, and they believe that they could get that, let's say $3,000 plus, and now they're only getting 2,800 or maybe less. That several $100s may have completely wiped out their profit, and now they're holding it at a loss. And what are they going to do? Doesn't that put pressure on the prices of the homes in general? Of course. Last thing I want to touch on right here, yet another robot being implemented in the restaurant industry. This one happens to be for White Castle, and I don't know if you can see it, but anyway, I'll put the link in the description as always. You can see right there, it's this big kind of box thing, and that's really going to replace so many people that work in this business here. I know it's not a fantastic job. I know that it's not glorious, and you don't get to be like the Queen of England and wear $1 million crown and do whatever the heck they do. I'm not allowed to discuss on this platform. But anyway, this just shows you that there are so many jobs that, that, like I said, might not be glamorous, but certainly give you some money, and for however much, I don't think they say in here, but this is a Flippy the robot, and essentially what we're looking at is a lot more automation and robotics coming around to take those jobs. That's all for this video. If you found it informative, hit that thumbs up button. By supporting me, you are able to get these videos higher up in the YouTube search rankings. I really do appreciate that. If you want to learn how to sell stuff online, you can do so at the AmazonGPS.com for free. Check it out. The financial system is complex, it's convoluted, very difficult to understand, but I've made it very simple in these two books. You can get the information you need to know at the link in the description below. Definitely check it out. And if you want the audiobook instead, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? I jam-packed it with data. Definitely want to check it out. Click it. I'll see you there.